Hi, I'm Chris, and welcome to this video on creating effective digital solutions to achieve business improvement outcomes. This is related to Learning Objective 3, where we look at this in terms of three things: digital currency, payment technologies, and sources of finance. In this short video, we're only going to look at payment technologies. Coles supermarket chain, most of us know them. They believe that within 10 years, you're going to walk into Coles, take your goods off the shelf, put them in your basket, and walk straight out the door. Why would they want to do this? Well, they want to cut $1 billion out of their bottom line by 2023, they're saying, so just a couple of years away. But I think they recognize that the technology and the implementation is going to take a bit longer for what we call a frictionless shopping experience. In terms of digital payments, why would somebody want to use these? There's two key things to consider. One is transparency of the movement of money. An organization like the ATO, well, they love the idea of a cashless society because they can see everything going in and going out. And I don't think it'll be too long before our end of financial year tax return is done literally automatically, because there is no ability for us to claim things that can't be seen, for instance. Government, sure, they're also interested in things like money laundering, right? And this affects all sorts of crime. If you think about something like human trafficking, it's still about money laundering is going to be related to it because it's the illegal use of money. So crime, definitely. We have organizations like AUSTRAC, a regulator that looks at this, so very much related. And they're looking at the flow and the misuse of money for non-legal activities. The reason I've got Westpac there is digital payments can sort of go both ways at the moment. They show transparency, but they're also catching organizations out that don't have really good governance and processes and systems. Westpac had 23 million breaches of the Anti-Money Laundering Act that cost them $1.3 billion in fines. The other advantage is this idea of reducing friction. Think about it this way. You want to buy a basket of goods, a particular good, you hand over a $10 note. There is an actual element of psychological pain associated with this. A digital payment, which is your card on the machine or your phone, is a tap and go. It reduces that pain to a certain level. Is this good for businesses? Well, in a survey that was done across Australia and New Zealand by Deloitte just a few years ago, businesses reported things like a 75% of businesses said they had a reduction in payment processing time, right? 68% reduction in general admin costs, better visibility and data reporting, better supplier relationships through digital payments, right? And of course, bottom line is very important. 1 in 2 businesses said, we have better cash flow out of this. Products have also evolved even further. Let's think about a company like Afterpay. You've got the pain of the digital payment at the store. What about reducing that pain further by reducing this idea of the immediate debt? If you know lay-by that was around, and especially in the 1980s and 90s, it's sort of the 180-degree reversal. You get the product at the start and you pay it off in certain amounts. Now, this is still, again, causing unintended issues. For instance, AUSTRAC asked Afterpay in 2019 to be audited by an external auditor because they were unsure if their terms and the conditions and the way they did their processes would lead to breaches of the Anti-Money Laundering Act. And it did, but they didn't find that there was any specific anti-money laundering occurring. There's also social friction. Think about us going out for dinner, nice restaurant, there's 4 people and we need to split the bill. And one person says, look, I didn't drink that $140 bottle of wine and I'm going to pay for a quarter of it. Digital payments has evolved. Things like Bizum, that is a product that I used in Spain. It's basically mobile number linked to bank account. I get the bill, for instance, and I pay for it, right? I pay the whole bill at the restaurant, but my other 3 friends that are with me immediately can just hit the amount of money they either spent, or we can decide to split it 4 ways. It's an immediate transaction. There isn't this 24, 48 hours sitting in a bank account. That is immediate from one account to the other, right? So you can see how technology is being used to change things. But the important point here as well is that digital payments is a technology, but it has to fit into a larger ecosystem, a larger pot of technology that enables it to happen so smoothly, right? 2009, 60 Coles stores had self-serve. Now nearly all do, 50% of us use them, but it's going to have to go further. Amazon Go is taking that step. They're using technology that actually exists in their driverless car program to do things like computer vision of everyone walking in the Amazon Go store, where they're going, sensors that are sensing how many products are moving per hour, right? Real-time data, then using that analytics with functions like deep machine learning in order to understand and be able to predict what's required, but also what are you doing with your customers. Retail works in that space of square meterage. How many sales do I get? What are my costs per square meter? How can I get the most efficient, effective use of that, right? But the point here I'm trying to make is that digital payment technology is important, but it comes as part, if we think about retail, of this idea of a frictionless shopping experience. So that means, it's hard to see here, but these black panels on the roof are all of these sensors knowing where I'm going in the store. What else does that give me? As Amazon Go, it gives me an unbelievable amount of information about the customer, a customer profile that goes so personalized and customized that it can set up stores in different ways in different locations because of the type of customer profiles that are there, right? It's done in a manual way now. You always go to fresh food first when you walk into Coles because it has higher margins. You may not have realized that, but that's exactly why the door's open and you're in the fresh food section. But it's going to go so much more. When you do that, you can combine that with a frictionless payment. So it's important here, again, to summarize, just to understand that transforming an industry like retail, as our example, store operations change, management accounting practices change, and with that, payment technologies must change to the point where we will walk straight out the store and there will be no need to have a physical contact in order to actually pay for something. Times are changing.